Good morning. Hopefully, for most of y'all, it is Monday morning after the Masters. For me, it is Sunday morning in the office doing a little paperwork for a couple of clients and then taking the quiet time to go ahead and get our monthly market update. I don't know who's going to win the Masters. There's the reverse image. I have on a Masters shirt because I'm excited about this afternoon. But what I'm doing today is our national outlook and update on the real estate market. And I would tell you there's a lot of talk about interest rates, a lot of fear out there. So if you've got the time, please take a minute to go through this with us and let us get some information to you whether you're in the market now or even if you're just a homeowner, because there's a lot of questions. I'm getting them almost every day from friends, family, clients. And this is a great opportunity for us to kind of go through the real numbers instead of the articles that might just give you clickbait information. So the title, how will higher interest rates impact the real estate market and will home prices go down? So that's what everybody seems to be fearing. And what is going to be the impact of rising mortgage rates on the housing market? So let's just dive right into it. We're going to go right into what we've seen. And this is the interest rates from the beginning of the year till now, which we were at the low threes, 3.11. And now this goes back to March, so it could vary a little bit depending on where you are. This is now April 10th, 11th. So we're looking at almost 5%, 4.6%. And for those of you that follow our market updates, hey, you should not be surprised because we've been projecting this to you for quite some time now. But let's take a look back historically at what interest rates going up have done to home prices. And this is actually a quote we'll actually throw in here from the chief economist at Freddie Mac. Mortgage rates are likely to continue to move higher throughout the balance of 2022. Although the pace of the rate increases is likely to moderate, much of the increase in rates in early 2022 is anticipation of what will happen later this year, especially with the Federal Reserve interest rate policy. So while we're going to continue to see rates go up, we're not going to continue to see them go up so fast. This is where we're looking back years back. So let's slide my head over here. This is what has happened to home prices in the past years when an interest rate has gone up by over 1%. Back in 93, 94, we saw an increase of 2.3%. Home prices went up still. We saw a lot of these are just over 1%. And in each case, the home prices went up, average of 8%. So the higher interest rates do not impact home prices historically. So really, when people are thinking the prices are going to reverse, the opposite might happen. Now, let's add another factor to this. What about home sales? So when we come back in here, we can see that those home prices are up in those years. And home sales actually did go down in a lot of these years. So one thing I've been saying a lot is, there's probably not going to be as much chicken in the barbecue. I've expected less transactions this year, and that might track based on what we're seeing in that information. But let's take a little bit further look still. So a couple of these are a bit of outliers. Like if you look in 93, 94, the interest rate increase was much higher than we're expecting with a final rate of 9.2%. Then, of course, we have pre-pandemic right here where the home prices fell off by 14%. Let's add another little factor here. If we look at what we're expecting, which will be interest rates to be over 1%, but not quite 2, the home sale change is not that drastic. I mean, we're looking at 2% decrease historically, the one outlier year being right there pre-mortgage crisis in 06, which was a 14%. So we do expect to see some fall off in home sales activity, but it just might not be that much. And I'm going to get into it later as to why we're probably going to see that, because I don't believe it's going to be interest rate driven as much as it might be inventory. So while the higher short-term interest rates will push up mortgage rates, I expect some of this impact to be mitigated eventually through lower inflation. Thus, I expect the 30-year mortgage rate to continue to rise, although we aren't likely to see the big jumps that occurred. We just talked about that, and that is from the director of forecasting at the National Association of Realtors. A couple other quotes to look at here. History suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices will slow. Freddie Mac analysis shows that a 1% increase in mortgage rate results in a home price appreciation that is 4% lower. For instance, a 1% increase in mortgage rates would change home price growth from 11% to 7%. So that might be good news for us because we've seen such rapid appreciation. Cooling off would be, quite frankly, welcome. So we've talked about interest rates. We've shown you that historically they do not bring prices down and that our inventory market is quite different. That's actually one of the things I think I might backtrack to here is what I did skip over before that quote is our inventory. So what's going on with these higher interest rates? What's important to note is every one of these historical years of home sales, the inventory was almost 5 months. Look at 04, look at '06, look at 2012 and 13, 4.8, 4.5, 5 months of inventory. And I'm going to stop there because we're going to get to that inventory problem in a second. So everything I just told about home prices going up, the reduction in sales activity, we're actually in a little bit of a different situation because of our inventory being so much lower than these historical times. Now I'm going to go back through to the spring housing information. And what we've seen, basically, we've got the first quarter. If you follow us on our Athens market update, we told you what's going on in Athens. And we're just taking a little bit more of a national look. Now, this is from Alto's Research, which is another source that I follow. We keep watching for it, but there are absolutely no signs of a market slowdown anywhere in the data. If anything, we're seeing the market continue to heat up. That's what we're seeing here. A lot of our agents, they're very busy, and we have a lot of clients that we're trying to help. And it's just a very maddening time because you're trying to help someone land a home, and they're having a lot of difficulty. This is not as much speculation and investor buyers as it is people looking to put their head on a pillow each night. So let's look at the buyer traffic. Now, as you can see, mostly across the country, we're looking at a very strong buyer traffic, which I can attest to. We're having a lot of showings. Georgia's right here with everybody in a very strong market. But this is where I want to get to next. Let's talk about seller traffic. This is what's different, folks. This is back in February. So we will have probably seen this improve in March. But most of these places are in the weak zone. Let's look here at Georgia, where we are today. You can barely see the GA because it is so white, because it is very weak. And that is what's going on in our market. That is why I went back to that inventory of 5 months. We don't have it. And so while we do expect prices to cool off because of interest rates, it may not cool off that much if we can't create any supply. That's really our problem. In past market updates, I had mentioned that a couple quotes where the inventory will tell the tale of the real estate market. And that's what's going on. We just don't seem to have the supply to meet what we need. This is another important thing to note. This is active listings increased for the first time in 6 months. So there's a little bit of good news. As you can see, each month over the past 6, the amount of active listings has actually gone up for the first time. And a part of that, if you look here in Athens, this was our graph from March. This is where I'm finding some good news on the home supply. We started the year well below the past 2 years in our housing supply, January, February, March. And this red line is 2022. We shot up all the way to almost on par with the last 2 years in March. So that was a good sign. But overall, we still have a supply problem. We're seeing things come to market, but they're getting gobbled up. Now, let's get a quote here from Lance Lambert, who is the editorial director of finance at Fortune. Now, more industry insiders are throwing out their previous forecasts and replacing them with a more bullish short-term outlook. Indeed, some experts say the 2022 spring housing market might go down as one of the most competitive on record. I can vouch for that personally, as I have clients that we are getting very strategic with our offers. And a lot of that is happening in our company as well. We are constantly having to put our heads together to help each other out to get our clients what they're trying to achieve. This is another thing about buyer traffic. The showings are exceeding the record pandemic numbers of 2021. So this is from showing time, and the activity is not slowing down, even with these interest rates right now, that we're still seeing the activity continue to go up. Last fall, we observed that home prices, although continuing to rise quite sharply, had begun to decelerate. Even that modest deceleration was on pause in January. So while we do see it slowing down, it just hasn't done it that much. And with the supply not coming up, we're hopeful that it is going to slow down and decelerate this rapid increase, but we're not quite sure because of our home supply. Here's a little bit to look at, too, that will tell you about the housing market and what really going on. You're seeing things that might tell you that pending home sales are down, okay? Well, yeah, they might be down, but they're down because of supply, not because of demand. That's what those slides were about. Now, this compares the amount of active listings to the amount of new listings. And let me be clear, an active listing means something that is on the market, that has been on the market. Usually that's an overpriced property or something that's a little unique and not moving. Now, the new listings, for the first time in a long, long time, have started to outpace the active listings. That means that things are getting so consumed so quickly that new listings are outpacing what's sitting on the market. In some areas, you'll look in an entire neighborhood and see nothing for sale. And that's the big thing that we keep beating your head over: supply, 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 demand, demand, demand. Whereas people are screaming about interest rates. Interest rates matter, but they're not going to impact it as much as you think. And, this is one thing I'm going to end on here, too, to show you why we're in this. This is the single-family housing units completed since 2010. You can see in 2005 what led up to that crisis, along with bad lending practices, which we've gone through over and over, that we do not see those same lending practices anymore. And we are behind in the housing that we built. And now with supply chain issues, cost of materials, it's going to be something hard to correct for a little while now. And then lastly, I'm going to show you this. Inflation, we did this a while back, almost last year, I guess, when we saw this inflation first hit in the end of the summer. And housing has just been a great hedge against it. So I know that's frustrating for some of you that are trying to get into housing for the first time as these prices continue to go up. But with inflation, home ownership is a great way to hedge against it. We've covered that before. And lastly, I'm going to end just giving you all information on our company. The market is trying right now. All the people in this picture are working with people trying to help them land a home or get the best value for their house. Feel free to reach out to anybody. Even if you don't have to do something right now and you just want to talk about what's going on, contact anybody here at our company, 5mrealty.com. Reach out at info@5mrealty. And, it's springtime, April. Thanks for following for almost 11 minutes now. Hopefully you got some good information from this about interest rates and what we expect to see. Have a great April. We hope to hear from uh, G-Days next week. We're going to have a tailgate out here on our lot. If you're in town and want to stop by and see us in our office building for G-Day Saturday the 16th, please do. Have a great